Good morning, everybody. It's Chris from Serene Education with your 4 major notes update for the 27th of September 2012. Hi guys, hope you had a fantastic trading day yesterday. Let's have a look and see what's been happening. Let's see what's in store for Thursday. So, weekly on the euro, still trading below that 50 period moving average and still below that 1300. Most importantly, the 1300 here still above price. That happens to be our price support and resistance level over a number of months. Previously at the start of this year, price is still trading under that. So we have this bearish Harami look on the weekly, and price as it stands this week is still trading at the underside of the 1300. If we look at the daily, you can see that I've taken a fib retracement of this move. So the lows here in July all the way right up to the previous highs here in September, mid-September, and you can see prices pulled back and is still trading under the all important 1300 to start with, this black line, this horizontal line, but the 23.6 fib retracement area here in the shape of the 12900. We had a lot of support through here the past couple of days, and we're seeing prices pulled back since yesterday's close. A nice pullback, higher than 50%, but still being capped by this 12900 mark on the 23.6. So on our 4-hour, you can see that the sentiment is still negative. We're still seeing lower swings. However, we've had a noticeable pullback over the past day or so, and that's coming to this breakout area here at 12900. You can quite clearly see that price was actually a support over here over a number of days at 12900. As long as price still stays or remains below that, we're still very much in a intermediate negative trend. You can see the institution moving still below us, and that would be our long-term major trend to 1275, as long as we remain below the 12900. So price has got to fail here at 12900 or remain below 12900, which is the 23.6 fib retracement level, excuse me, intraday, to see price move towards that 1275 as our first target. We get that failure here at the 12900, we should see price continue to the downside. So on an hourly chart, this is my entry chart style, you can see that the institution moving average is starting to swing low. It's starting to instead of moving high, it's now starting to correct, and we're starting to see it fall to the downside. Remember, this is the first time we've seen price trading below the institution for as many months, and you can see that price is moving all the way right back to here. So you can see we're trading at the underside of the institution moving average. Notice the histogram, the CTC histogram, is more red than blue, telling us that we should be looking for negative sentiment, and you can see that the RSI is trading below the 50% line. Yes, it's pulled back, but it's still below 50, which remains, well, still tells us that the trend is still negative. Look at the swing lows; those are still moving to the downside quite clearly. All the moving averages, bar the 20 period, are above price. And if you look at the highs here, you can quite clearly see that the highs on the RSI are also pretty much dictating that price action is looking lower. So what we need to see here, you can see a noticeable pullback, just recent, on over the last, say, from 5 o'clock last night GMT all the way up to currently now. We've seen a nice pullback to the underside of 1290. We do need to see price now finding resistance at this level to see price continue on its trend to the downside. Failure to do so, and we see a bullish engulfing candle here, would tell us we're seeing this sentiment that we've seen the past couple of days being just a breakout or a fake out, and we're seeing price still favoring those upsides. So it's imperative that we see a nice bearish engulfing candle now at the underside of 1290 to see price continue on the way to the downside. Onto sterling, let's have a look and see this pair. We know that on a weekly we have a major resistance level in the shape of the 16300 mark above us, and you can see last week's candle very indecisive in this shape of the spinning top. Now to see this is clearly a resistance level for long term, we do need to see this week that's in play now falling bearishly. It needs to be a nice bearish candle falling lower, ideally the whole length of the prior week, but if we can get half that, then we'd clearly state that we should be seeing some sort of pullback for the foreseeable future. At the moment now, it's still very indecisive. Yes, we've seen a pullback, we've seen a drop recently, but if you look at the daily, you can see that the range is now being capped roughly around the 1500 mark. If I take the all-time low here in June after this major sell-off that we saw through May of earlier this month, you can see that the June low to the current high at 16300, you can see that the 23.6 here in red is sitting just above the 1605. Okay, these would be your pullback areas for long-term trading. However, if you look at your intermediate trend, you can see this shorter-term trend up here, for example, You could look at the 23.6 here, this little consolidation mark over here in play as we speak. Get below that, then we should be targeting the 20 period moving over to 38.2, ultimately back towards this major support and resistance level here in the shape of this 1605 mark, the red line, followed by the ones to the bottom. So you can quite clearly see that if I move to my 4-hour time frame now, notice the histogram is still showing positiveness. There's a lot more blue than red here. However, you can quite clearly see that we've had a change in hand in terms of sentiment. You can see as price was heading higher just recently, there we go, through that same period, making higher highs or making higher attempts into 16300, you can see that there's a notable change in the RSI, falling lower, well overbought through the 70% area here on the RSI, but now changing. And for the first time, you can see that that sentiment is now trading at the underside of the 50% line. Before these consolidations bring us back towards this area here at 23.6, just above the 1700, you can see that the RSI was on the 50% line. So there's still positive. Now, just recently, hard right edge, you can quite clearly see, if I just zoom in, this new swing low, notice that taking us below the 50% line. And now this consolidation over here that we're seeing over the past 16 hours or so, you'll notice that RSI is now below the 50% line. However, we're still above the 23.6. So we want to see that bearish engulfing candle, and if we could get that in the same area of this intermediate trend low over here, if I can just make that nice and positive so you guys can see it clearly. If we get a bearish engulfing here, it'll be a breakout of this consolidative range here, and we should be targeting these particular areas to the downside. 1610, 1605 is the major one. Ideally back towards the institutional moving average, which in this case would be our 61.8% here at the 159500. Back towards the institution to be our long-term target. But in order to see that, we do need to see a confirmation signal. So we have to be patient. Got to see that bearish engulfing candle here on the 4-hour to definitely confirm to us that this is negative sentiment, and we're definitely looking for a top, and we should be looking to plot for the foreseeable future a continue to the downside trend. So wait for that confirmation signal. Here's my hourly chart. You can quite clearly see a change in sentiment as we headed into that 16300, the major high recently on the hourly. You can quite clearly see that the RSI has started to change in the shape of, if it's, you want to see RSI moving with price, confirming that that sentiment is genuine. Here you can quite clearly see as we headed into it, RSI was starting to change already, making lows as price is moving higher. So we're actually getting this divergence into this major resistance level here, and as price has now moved lower over here through that part, you can see that RSI has been dropping. So it's from here down to where it's currently trading now is fantastic because it's moving with price. It's confirming that the sentiment is genuine. Through here, for example, you can see the price had already changed, which is telling us, listen here, there's no more buying sentiment in this. Everybody's starting to look at potential shorting opportunities, and we're seeing the changing of the guard. Changing the guard, though, we need to see a definite break lower and trade lower. Okay, we do need to see a nice break, bearish engulfing break below this. You can see just recently we had that. However, the pullback's been quite great. So if you got in around here somewhere, you wanted to see your stop being above the institution moving average, because you can see quite clearly now we've had a major break, and this has kind of taken out these highs, previous swing highs that we've seen recently. So it's imperative that we get a genuine break lower. We need to see that sentiment moving lower, a nice bearish engulfing here. Yes, you might be giving away at least 50 to 60 pips on that. However, the long-term the long-term goal for this and the outlook would be very negative, and you would be profiting a lot more than 3 or 4 times that of the 60 pips that you would have given as your initial, given away to the market initially. So it's imperative that we get a nice bearish confirmation signal here to confirm that price is looking lower, and then we'll get in. On to the US dollar Swiss franc, this pair over here. Let's have a look at this one. Doing a lot of work recently, being capped by that all important prior high here at the 1000, price engulfing, and since then forming this almost like a, if you look at it, almost like say a head and shoulders pattern, and then we've seen this price moving to the downside. Along the way, pausing at certain price support and resistance levels here in the shape of the 970, prior resistance level here with the evening star formation. Here a nice little consolidation period over a number of weeks before we saw a nice genuine bearish engulfing candle here, and price has fallen, stalled yet again in this consolidative band, and then broke lower towards the institution moving average. Since then, trading at the underside of the institution on the daily. Very, very important. If you look at where the institution moving average has been prior to where we are currently now. You can notice since September, October of last year, we have seen price trading above the institution. Now for the first time we're seeing price trading below the institution. So that's negative sentiment. So now we want to see, you can see quite clearly now we've had a consolidation here with a little bullish engulfing candle. So a nice little support here at 925. Prices like that, building on that sentiment here. Nice solid support, and prices built onto that. But it's built on it straight into a price support and resistance level in the shape of the institution moving average now at 940. We do need to see price. If this is a genuine bounce, then we need to see the institution being broken here at 940. Nice bullish engulfing candle will tell us that sentiment is still looking positive near term, so we should be targeting these areas to the top side. Failure to do so, we need a breakout of the institution recently. We are trading below the institution for the first time since a full year, August, September, October of last year. Now we need to see a bearish engulfing candle here. Failure at the underside, so we had a breakout, the pullback, and then the failure, continuation in the direction of the breakout. That's likely what happens most of the time. You had a breakout, pullback, continuation in the direction of the trend. Same thing needs to happen here. We need to see a failure here at 940. Get that failure at 940, then we should be targeting price back towards this 925, 930 consolidation before we see price falling even lower towards these areas here at 890, which is our long-term goal. This is the 23.6 February tracement. Apologies. The 930 as we speak now is at 23.6. Sorry, this black line here had actually covered that. If you look at the daily, I've taken a February tracement from the all-time low in August of last year to the current high that we had in July of this year. You can see the February tracement. 23.6 is just behind this black solid line here at 930. The 38.2 would be our second target. Get below that 930, nice bearish engulfing candle at the underside of the institution, which we've seen trading below for the first time in a year. Then we should look at that 38.2 February tracement as our long-term target here at 890. Get below that, then 50, then 61.8, etc. to the downside. So it's imperative though, if this is genuine negative sentiment here near term, we want to see the trend line, this intermediate trend line, resisting price moving higher above this 23.6 February retracement area here, and pushing her lower. Getting a close below that 930 would genuinely look at price favoring the downside for the near term, and we should be targeting our first target long term here at the 8,900 mark. Last pair of the day is US dollar Japanese yen. Let's have a look at this pair. This one over here playing tic-tac-toe with the 78 over here, which is having to be our major long-term support and resistance level. You can see on the daily, I can go back to June, July of last year, and you can see since July, mid-July onwards towards 2012 January, you can see price was captivated or consolidative inside or in between the 76 and 78. A lot of intervention in this range from the Japanese government. One here to start with didn't really help push price any higher. Another one over here, quite a larger one, on the 31st of October, really trying to get price moving from these lows, these all-time lows that the US dollar has been trading against the yen. That failed to really stack up, and you can see that we're trading in this range between 76 and 78. Since then, beautiful non-farm payrolls earlier this year in February saw price really rallying with a lot of movement, and then this taking it higher, almost a massive shot in the leg right up towards the 8400, which happened to be our major support and resistance level going back a number of months through 2011 and 10, but failing not to actually hold on to those and push higher. A lot of indecision candles since then, and prices kind of fallen back towards previous support and resistance level near term, i.e. in the shape of the 80, which happened to be a major support and resistance level also recently, the past couple, well, last year in particular. And I've just got to put that in so you guys can see it. So moving back towards this, we'd like to see some sort of consolidation here to confirm now there was a genuine breakout near term February. However, that failed to stack up as price rallied or fell back through these levels, and you can see that once or twice we had a breakout. However, the sentiment wasn't generally behind that because we didn't see that support, and then the continuation in the direction of the support break, moving back towards the underside of 80 and then consolidating and then literally breaking lower. So now beforehand we had price trading between 76 and 78. Now near term we're seeing price trading between 80 and 78, and just recently we had a false breakout here on the Fed QE3 announcements coming through, telling us that Fed Mr. Bernanke was going to continue to print money for the foreseeable future. Didn't give an actual closing date, didn't tell us when he was going to stop, but he was just saying, yeah, they're printing, and that's it. and that took this knee-jerk reaction. So we're looking negative up until this break here, and then all of a sudden, bang, price moved, shot back up to the upside, and people got onto that and then traded and failed at the institution, at the institution moving average. You can see that there's a lot more action below the institution moving average recently in the last 2 months or so compared to prior to that. And that's not good sentiment, because it's still telling us the sentiment is generally looking negative near term. And if that stacks up, then you're going to see, oops, apologies, wrong one here. You can see that the sentiment, these highs now swing low, swing low, swing low, swing low, are getting lower through this consolidative range. Okay, so now we spend more, before 78 acting as a nice support area, you can see in near term, we've had 1 or 2 breaks, and this is the second break in as many months, and that's not really looking all that positive. However, you can see we've had 2 consecutive days of indecision coming in the shape of these spinning tops. We want to see a very decisive candle. The problem is, though, the longer price or US dollar hemorrhages against the yen, there's more likely of Fed or the Japanese government intervening, i.e. coming up with some sort of reason as to stop this hemorrhaging price. We don't want to be getting back down towards these lows over here at 76, because the really weak US dollar for the yen is not a good proposition. Okay, they'll do everything they can to try and stem this negativity on the US dollar against its really close compatriot who does a lot of import and export with. So it's in their best favor to stop this negativity to the downside. So a lot of people will be scratching heads going, well, should we be shorting this if there's going to be potential for either governments to intervene? So it's the same case with the euro Swiss franc price going sideways very quickly. I think it's about 4, 5, 6 months now of prices trading within a 30 pip band for the last 6 months, as I said, because they're too worried about intervention from the Swiss government. So yeah, same thing. The lower we trade, the more likely people are starting to are well aware that there could be a chance for both governments that could intervene to try and stem this negativity. So we could see prices moving up. But if we do get a genuine bearish engulfing candle below that, then whatever the governments do, you can quite clearly see the Japanese government failed last October, August, getting that sentiment moving higher. But we don't want to be going short and seeing this, because this could take you right out of the market really quickly. So if you are looking for bearish sentiment over here, look for that bearish engulfing candle, but trade with very tight stops to try and stop the opportunity if it does arise of the intervention going against you. Other than that, that's it, guys. I've kept it nice and short, 20 minutes, short enough, but that's it. Please back it up with sound money management. Anything that you're doing, if you're trading the 4 majors, and if you are using this particular template, please ensure that you follow the rules and you back it up with sound management. Other than that, the simpler you keep it, the more effective it becomes. Don't complicate it. Just make sure that you are getting in for a reason. The market's done exactly that, XYZ. You've got to trade it very mechanical, and then you just follow the principles. Keep it simple, guys. Otherwise, have a look at your news announcements today, guys, to see if there's anything out there that's really going to get in the way of price action, or it's going to actually help price move today. We've got this morning current accounts for sterling, 9:30 GMT. We've got the final GDP quarter-on-quarter figures also out at 9:30. Then we have the Italian 10-year bond auction. That's going to be quite important for Europe. That's a tentative outcome, so that could come out anytime this morning in particular. Then we go into this afternoon. We've got core durable goods orders month on month for the US market at 9:30 GMT. We have unemployment claims, guys, at the same time. There's quite a lot of info coming out at 1:30 GMT this afternoon. We have core durable goods, unemployment claims, and the durable goods orders. And then later this afternoon, we have pending home sales figures month to month, and that final GDP quarter-on-quarter results. So very important news today for the US market in particular. Be aware of it, factor it in, and take it from there. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.